Hi everyone, welcome to Anu's classroom. Today we are starting with MMPC 4, that is Accounting for Managers, and this is the first uh, video on this topic. And so we'll just do a quick introduction on the basic concepts that is being dealt with in accounting. Okay, so let's get started. First and foremost, why should we learn accounting? You might have come into, you might have chosen MBA either because you decided that you want to start your own business, or maybe because you want to pursue a post graduation. Maybe you are looking for getting a job somewhere and you think that an MBA would help you there, right? And you might have all come across people asking for, like, which specialization are you going to go for? Now, not all of us are going to be good at math or good at accounting. Not all of us would have come to MBA from a commerce background, people who have already studied something related to commerce or accounting. And the concepts in financial accounting would be a bit difficult to grasp for such people who have not come from a commercial commerce background. Or maybe you might have come looking for an MBA because you want to maybe pursue, let's say, management in IT or HR management. And you might be thinking that, hey, I am interested in learning HRM, that is human resource management. I want to be an HR one day. So I'll only be dealing with people, right? I'll be dealing with their hiring or their allocations and such things, right? So I'll not be dealing with the finance part of the company. Then why should I learn it? Well, this is our first semester topic, and in the first semester, especially in the first year, if you think generally in MBA, we'll be learning and teaching about almost all there is to do related to business administration, right? Because after all, our courses to help us master business administration, correct? So that is the reason why we'll have to stick with understanding accounting. And through this subject, what the university or any university for that matter intends is not that you be very good at handling all the financial aspects of the business. That is not the main purpose. The main purpose is that you will be a manager, right? One day, either of your own business or somebody else's business, you will be managing it. And when you are managing it, you should at least have the literacy, enough literacy, financial accounting literacy, to know whether the balance is tally, right? Business always has money involved, and money is important, right? People do all these things to acquire money, acquire wealth, correct? So how much you put in, how much you make out of it, how much you lost in it, all these things are important. And even if you are not the person who is doing the financial accounting part, you will be a beneficiary of it. You will definitely have to look at your reports and make financial decisions, whether to invest more, whether to diverse, or whether to expand, whether to cut short of maybe people or products, whatever that is, right? Whether to spend more on advertisement, whatever that is, you need to make financial decisions at one point. And to do that, you need to know how to read these financial reports. So that is the reason why we, even though you don't think that you will be going for financial accounting or the finance part of it, you will have to learn it, because you need to know what is being given to you. You need to know how to read it, right? So to in order to bring in that financial literacy to all the future managers, that is the reason why this subject has been included. Okay, so that is a brief about why as MBA graduates we should learn about accounting. But on a broader sense, right, on the sense of a business, what is the purpose of it? Why are we learning accounting? For one thing, what we must understand is that accounting is often called as the language of businesses. Okay, so what is the basic function of any language? It is to serve as a means of communication, correct? So it is the same thing when it comes to accounting also. The accounting will communicate reports or the results of business operations, its various aspects, to its stakeholders. So being a language of business, you can say that the what you can how do I write it? Yeah, financial results need to be communicated to the users. Now, who are the users? I'll come to it. Okay. So, to communicate the financial results to the users, we need a language, right? We need a medium to express it. And that is what accounting actually serves as a purpose. Now, let us take an example. Let us say that this is Mr. Raghu. Okay. Let us call him Mr. Raghu. And Raghu has set up a small business, consider. Okay. Something, maybe, I don't know, maybe a t-shirt printing business, whatever it is. He has started a business. And say he has invested 1 lakh rupees in it by means of purchasing machines required, the raw materials, the initial setup costs, and all those things. Let's say he has invested rupees 1 lakh into his small business. Okay. And he has started the business. He is trying to sell the clothes. He is advertising himself, his products through various ways and all those things. Now, after maybe 1 month has passed, okay, how can Mr. Raghu know what happened to his money? Initially, he started with 1 lakh in his bank account, say. Okay. Now, at the end of the month, he may have 1 lakh 10,000, or he may only have, let's say, 80,000, or he may have a completely empty bank account at the end of 1 month. We don't know. It all depends, right, on a variety of factors. Now, where did all this money go, or where did the money come from? How does he know that? For that, if he did all the transactions through his bank account, then he'll have to look at his bank's passbook, correct? He'll have to look at his financial statement. What is there in that financial statement? It will give you, if you look at the passbook, any account's passbook, what all things will you know? The account number, the IFSC code, who does that account belong to, the customer CIF number, which bank it is, which the bank's IFC code, and the address of it, of that person. All these things you will know, and then from which date to which date this financial statement is, that much things you will know, correct? Now, that is the header part of it. After that, what comes? What do you know? You will find out that there is a date column which notes down on which date this transaction has occurred, and then a description column which will detail what happened. And then there are two columns. One is the debit column and the other is the credit column. Debit column means whatever money you have took out of the bank account. Credit column is whatever money you have put in that bank account, right? So this way of representing is this way of representing what happens is that every transaction in that passbook will definitely have some amount of money involved. Either it is coming or it is going, but there is money involved, right? Cash involved. So this is a way of communication, right? Now, looking at the bank statement, Mr. Raghu will understand how his money went, or from where this money came in, right? Rather than saying, oh yes, we made a lot of money, or we made a lot of profit, or we made a loss this month. If these figures, these figures are proof of what happened, right? And this way of recording the activities of business, if it was not there, then we would not have substantial proof on what happened to our money, correct? It is not just for business. Budgeting and bookkeeping, this is very important in our day-to-day lives also. If in case you are not doing, I strongly urge you start doing it, so that you will start having a control over your money. You will know where you are spending too much and where you are allocating a lot of funds, all those things. Even if you're not starting a business or not going to do anything related to money in a business organization, I would strongly suggest that you start bookkeeping. Okay, so coming to our topic, so this process of noting down these financial information and communicating it to user. So Mr. Raghu was one of the users, right? So communicating it to Mr. Raghu is what we have to learn accounting for. Now, this is a very small, very, what you can say, very tiny bit of what accounting can do, right? There are a lot more things that accounting can do. It can give you reports, it can give you even suggestions on how you can better utilize your funds, all those things. But uh, this is how money speaks, right? But in order to understand this language of money, we need to know to read it and write it, right? So that is why we should learn accounting. So simply put, in a single sentence, on any theory answer also related to accounting, I definitely say start by this line, that accounting is the language of business. Okay, and build your answer from that. Okay, yeah. So moving forward, let us see who are the potential users of financial statements. right? Now, who are the users? First and foremost, users are parties that are interested in information about the entity's financial information. Okay, the users of accounting information or financial statements are those people, okay, whoever that may be, who has an interest about the financial information of the entity. In this case we are talking about is the business. Okay, entity here is the business entity, and whoever needs the financial information, they are all the users of these financial statements or the end results of accounting process, you can say. Financial statements and reports are all the end results of the accounting process, right? They are the products of accounting. Now, a few of the users, you can say, are the owners or investors, and they would need it to understand profit generation, returns, growth, losses, all those things, right? The management is another user of financial statement. And why does the management need it? For taking operational and strategic decisions. Okay, then lenders, like if you want to take a loan from a bank, then the bank is also a user of our financial statement, right? Why does the bank need it? Because looking at the financial statements only, the bank or whoever the lender may be can assess whether or not this company or this entity is, if I give them money or if I give them loan, whether or not they'll be able to pay it back. If I see that according to the financial statements this company is not in a position to pay back the whatever loan I am giving them, then definitely the bank will not pass the loan, right? So lenders need financial statements to understand or identify whether the company is able to pay loans. Again, same way, suppliers and creditors also look at financial statements to identify the ability to settle trade obligations. Governments look at it to understand the tax and regulatory purposes and such things. Employees look at it to understand about whether or not their job will be secure, what their compensation could be, right? If it is a company which is not making much profits, then naturally compensation, you will not, you there's no point in expecting large hikes or huge bonuses or anything like that, right? Annual increments and all, forget about it, correct? Even if companies are actually having huge profit on the books, you only will get meager hikes. So don't even think about a company which is not having much profits, correct? So employees also look at the financial statements to understand about their compensations and job security. Now customers, they look at it to understand whether the entity, the business entity or organization, is able to stay in business and deliver the promise. If suppose it is soon going to be a bankrupt company, then naturally even if I give them the money to and order few things, there is no guarantee that by the time the production is done and I need the stuff, I'll get it. By There is a high chance that the company itself might not exist at that time, right? In such cases, customers will shy away from making business ties with the company. But if it is a very strong, healthy organization that is growing, then naturally customers will come because there is a certain amount of trust that is getting built up that this company is here to stay. Correct? So we will be interested in buying things from that, right? For example, right now HTC is a mobile phone company. When news started coming in that they are going to shut their India operations, then naturally if a person is looking for a new phone, knowingly they will not buy a new HTC phone because they know that the company is soon going to be gone from India. So if at all something happens to the phone, customer service is going to be a bit of a hassle, right? Same way, Ford stopped their India operations. So naturally the demand for Ford cars came down because of the fear in the minds of the customers that okay, the company is shutting down, God knows why they're shutting down. Maybe the cars are faulty. If it turns out to be faulty, I've put this much amount of money in this car. If it turns out to be faulty and I'm not getting the parts or service on time, then I'm done for. So rather than buying Ford, let me buy Maruti, which is in the market established and there is no signs of it going down anytime soon, right? So similarly, customers also look at the financial statements to consider whether or not the company can deliver its promises. And then the general public access requires it for research and financial news and all, right? Or if you are an investor who trades in stock market, you would be a general public and you would be looking at the financial statements, especially the profit and loss statements, to know whether decide whether or not you can invest in the stocks of that particular company, right? So for all these things you need to understand financial statements. Okay, So let us look at a definition of accounting according to this. So AICPA. Who is AICPA? American Institute of Certified Public Accountants. I'll write it down. American Institute of Certified Public Accountants. They put forth a definition for accounting. And according to their definition, accounting is defined as the art of recording, classifying, and summarizing in a significant manner and in terms of money the transactions and events which are in part, at least, right? At least in part of financial character, and interpreting the results thereof. Okay, so according to this definition, we have four phases of accounting. First is the recording. Next, recording is nothing but writing it down, right? Recording, classifying, that is grouping. Then summarizing. Okay, so summarizing could be in the form of reports or statements, right? And then interpreting, that is reading it to take decisions. Interpreting, these are the four phases of accounting. Now, what all transactions or events would be recorded here? Only those transactions or events which are at least in part of financial character. So only those transactions which involve money. Like for example, um, you might conduct a flash mob, okay, but flash mob will not be recorded in your say journal, but rather if for that flash mob you had to book a venue, and booking that venue meant that you had to give a say a deposit or a rent for that venue, if that will be recorded in your journal entry because money was involved. If money was not involved in the transaction or event, then it will not be recorded, and the recording will be in terms of money also. Suppose, say for example, let's take the example of a flash mob. Okay, so you decided that you are gonna, your team of people, a few dancers including you guys are gonna organize a flash mob in a mall near you. Okay, but to do a flash mob you need to uh, first of all you need to get the permission from the mall authorities, and if the mall authorities give you permission but they say that okay, you can do flash mob but for this particular hour, say 3 o'clock to 4 o'clock in the evening, if you want to do flash mob over here, we are okay for it, but you need to give us say 5,000 rupees rent. Then in your journal you will record the transaction as 5,000 rupees rent given for what you can say for flash mob, right? So that 5,000 rupees will be given over there, right? It will be given in terms of money, not anything else. So that is the thing. So all the things are recorded in terms of money over here. So this is a very important definition of accounting. You can write it down even in your essay questions, wherever you find it as appropriate. You can start your answer with this definition, and you can go on and write down about these four phases of accounting if a question comes like that, and write down what you understand by these four phases. Quote an example. Okay, you can even quote the example of Mr. Raghu, which we discussed a little while earlier. Okay, so that is one definition. Now there is another definition for accounting, and that is mainly related to the purpose of accounting. um, okay, yeah, so that definition was put forth by AAA, that is American Accounting Association. Again, I'll write it down. Okay, that is by American Accounting Association. So that is mainly talking about the purpose of accounting actually. So we said, right, accounting is the business language, right, language of business, and it helps us identify whether the economic entity or the organization can make use of its monetary resources to achieve its goals and objectives, correct? So based on that, uh, what you can say is based we can say that the ultimate aim or the ultimate purpose of accounting is to provide information to various users, and those users will utilize this information in making economic decisions, whether to cut funds or whether to give more funds, right? Such things. So accordingly, AAA, that is American Accounting Association, defined accounting as the process of identifying, measuring, and communicating economic information. Okay, identifying, measuring, and communicating economic information to permit informed judgment and decision by users of the information. So this is also an important definition of accounting. Now, so from all this definition and all the things that we have discussed so far, the key takeaway, okay, for us over here is that the main purpose of accounting is to provide information, right? It is to provide information to different users and allow them to make rational decisions. Ultimately, whichever the definition of accounting is, it is the language of business, and the purpose of a language is to provide information to the users. And why are we providing information? To make rational decisions. Okay, and the users are generally interested in a company's results of operations, financial positions, solvency, liquidity, the cash flows, and all the other economic information, that is all kinds of information that is related with money. Okay, all kinds of information that is related with money. So we said in the AICPA definition, we said that accounting is an art, correct? So accordingly, so what is accounting? Is it an art? Well, why do we call accounting an art? That is one more thing that we'll touch in this video. So the reason why in AICPA definition accounting is called an art is that to if you have tried writing at least one journal entry, you will know that there are multiple ways in which a single type of transaction can be recorded, like a lot of different ways in which you can frame that transaction, in which cash or money flows from one account, say account A to account B. So to actually read that statement and identify its components and write the proper financial transaction down in terms of money, in terms of debits and credits, it actually requires a certain amount of skill and creative judgment. So that is the reason why accounting is called an art. But it is not that it is just purely creative or it is a purely individualized skill. There is a certain science behind it as well, okay? Because it is a body of knowledge, and people have come together and come to a consensus about how you would, on what basis would you define or decide which account is to be credited or which account is to be debited by looking at the sentences. There is a exact science behind it also. There is a consensus, or there is a collective agreement on how to write these financial transactions or debits and credits, how to write these books of accounts. There is, or how to prepare reports from these book of accounts. There is a collective agreement on it. Therefore accounting can also be said as a science. But when we say science, we should not think of it as an exact science, because as transactions are becoming more and more complex, and as time is progressing, people are revising and what you can say, and they are keeping on updating these rules. Okay, so accounting as is an art as well as a science. So just like we say that management is an art and science, same way accounting is also an art as well as a science. Okay, so there are many different types of accounting and different areas of practicing. A few of the types or branches of accounting we will look at over here. So a few of them are financial accounting. What is financial accounting? It is the business transactions which are recorded, like it is used for preparing and presenting the financial statements, which will be used by both the people or users within as well as outside the organization. And when we prepare such accounting data or financial statements, we generally go with the GAAP observed rules, that is generally accepted accounting principles will be observed, and it is primarily concerned with processing of historical data. Then another type is the managerial accounting, where the focus is on providing information especially for the internal users, that is the management. Okay, so it could be for budgeting or forecasting, cost analysis, evaluation of business decisions, and such things. So when accounting is done keeping those things in mind, we call it as managerial accounting. Now, a subset of this is the cost accounting, where we are interested in understanding the manufacturing costs and um, the actual cost versus our budgets and such things, so that we can help in identifying places where we can cut short of costs, or if budget needs to be increased because our budgets are not practical. All those things, if we want to know, that type of accounting is called cost accounting. And then definitely there is auditing. Again, auditing could be internal or external. Then there is tax accounting, which is the type of accounting we do to calculate what tax is there, what tax are we liable to pay, or if we are liable to get any tax exemptions and all those things. The type of accounting we do for that is called the tax accounting. Okay, then we have accounting information system, or AIS, which involves in the development, installation, implementation, and monitoring of accounting procedures and systems that are used in the accounting process, like business forms, accounting personnel direction, software management, all those things. Then there is the fiduciary accounting, which involves handling of accounts managed by a person entrusted with the custody and management of property, of or for the benefit of another person. Okay, that is like the trust accounting, receivership, estate accounting. Those are fiduciary accounting. Then we have forensic accounting, which involves accounting in cases where there is a court or litigation cases, fraud investigation, claims, dispute resolution, all those legal matters. Okay, when legal matters are involved, then we have the forensic accounting. And it is also a very what you can say, very much in scope accounting branch, you can say. There is a lot of scope for forensic accounting, especially since there is a lot of fraud that is happening right now. Okay, so in case you are interested in pursuing financial management as your MBA specialization, then naturally you can take a deep dive and look at these different types of branches, and make a career choice on what kind of accounting do you want to specialize in, and go that way. Okay, and definitely you can do CA or CPA, CMA, all those things, right? If even if you are not from the MBA background, if you are generally from the commerce background and somehow stumbled upon this video, then also definitely take a look at these different types of branches of accounting and decide on what you want to specialize in and go accordingly, right? It is not that you don't have to study all the other things, but along with all the other things, focus a little bit more on this. So yeah, so those are the different types or branches of accounting. Now, what are the different areas of practice, like where all do we apply this accounting principles, right? Where all that is generally the career opportunities, you can say. Now we have public accounting, where it is aimed at the providing of advisory or audit and related services to contractual clients. You can go for commerce and industry, where professionals are employed in the private company for their accounting requirements. Or you could have a career in the government accounting, which is for professional working in the government agencies. Now, or education or academia, like professors, researchers, authors, and all, that is also a good career scope. Okay, so the areas of accounting practice are just the career opportunities that you can get by learning accounting. Okay, so coming to the next important topic over here, that is, what are the objectives of accounting? Like, so the objectives of accounting mainly are, first of all, to maintain a systematic record of business transaction. Now, we in the example of Mr. Raghu, we said, right, that if he needs to know how all his money flew, right, what was the money flow into and out of his business transaction, he needed some way of seeing those business transactions recorded, right? Otherwise, on day one you may remember what all things you do, but by the end of the month you will not remember all the transactions that you were involved in, right? You will forget most of it. But then if you would have written it down somewhere, if you would have had a record of it, then it would be much more easy. So that is first objective of accounting, that is to maintain a systematic record of these business transactions. And for that we go for the journals or ledgers, trial balances, all these things are created. Now, to ascertain profit and loss, so for every business we are most interested in learning or knowing whether we made a profit at the end of the month or whether we made a loss, right? So in order to do that also, we need to know accounting, right? We need to take the help of accounting, because we need to create a ledger, We need to create a journal. From there, the ledger or the trial balance, the balance sheet, and then by comparing the balance sheet only, we will know whether or not we made a profit or a loss, right? So to a certain profits and loss, it is important. Now, to determine the financial position, that is to check on the value of the assets and the liabilities, and for that again we prepare the balance sheet. To a certain profit and loss, we prepare the profit and loss account. Okay, then to provide information to various users, right? There are a lot of concerned or interested parties that have stakes in our business of various levels, and they all are looking forward to our financial statements. So to provide information to them also, we need to take the help of accounting. Then to assist the management, that is in taking decisions, appropriate decisions, again we need to have the help of accounting. So all these things come under the objectives of accounting. Now, what is the scope of accounting? This is also an important aspect of when we start to learn about accounting. Well, the scope of accounting, for one thing, we said, right, there are different types of accounting: cost accounting, managerial accounting, taxation, auditing, all those things, right? So the scope of accounting actually generally varies a little bit depending upon the type of accounting that we are considering. Okay, but on a general aspect, by taking accounting in general, we can what you can say, we can give a high level picture of the scope of accounting as this um, diagram over here. So again, we said, right, in the initial time that we have four phases of accounting. First and foremost phase of that is recording. That is this data creation and collection aspect of it. So either it could be historic data or it could be predictive, right? If we are talking about the profit or loss, the cost accounting and all, we will be dealing with the historic data. But if it is for managerial aspect, like managerial accounting, then we will be more interested in the predictive aspect of our data, right? So first and foremost scope is in the data creation and collection. Okay, so data creation and collection is that area which provides the raw materials for accounting. Okay, so that is data creation and collection. So all this data will be recorded in terms of some accepted rules and regulations, and based after recording them, we start evaluating them for making what you can say, for generating appropriate reports. So once we create the data, we record it. Okay, historic data gets recorded, whereas the predictive data is used for data evaluation. Okay, so data recording is done by taking help of all the appropriate accounting methods, right? Well, it could be manually recorded, it could be mechanical, or it could be electronic. Like our e-statements are electronically generated data recording system, whereas earlier we used to do it manually. If we do it ourselves, then like if we are interested in creating our own say budget book, or like what you can say, daily spending journal, if we do it ourselves on a in a register, then it is again a manual way of recording the data. Okay, then comes the data evaluation. So as we said, right, data evaluation is used for especially the managerial part of it, that is for budgetary controls, performance analysis, fund flow analysis, and internal auditing. Okay, so that is data evaluation. It is regarded as one of the most important activities in accounting. Okay, so the analytical and interpretative work for all these things, for either internal or external use, will all come from this data evaluation part of it. Okay, so it is kind of like an auditive work which focuses on the verification of transactions as entered in the books of account and authentication of these financial statements. Then comes the data reporting. The data reporting again could be internal for the use within company, or external to be shared with people outside the organization. Like it could be the government, it could be your investors, or it could be the general public even, right? So that is the data reporting part of it. And then so binding all these things, we have our accounting theory. So the entire scope of accounting, I hope it is clear to you. It starts from data creation and data collection. The data could be historic or it could be predictive. Then it goes to data recording and data evaluation. Okay, so this is the first step. Then data recording and data evaluation. It happens almost simultaneously, right? And then finally it goes to data reporting. Okay, so that is the general scope of accounting. So with this, let us conclude our first class on accounting. Thank you so much if you did stick with me for so far, and I hope that you have got a general idea about what accounting is, and why we should learn accounting. And if you did like this video, consider subscribing. We already have completed the business communications subject, MMPC 7. The entire 4 blocks video is already out on our channel. If you are interested, do check it out as well. Thank you so much. Happy learning and all the best for the upcoming exams.